Hi guys, can I just do a quick mic test to make sure you'll hear me okay?
Yeah, we can hear you, Ryan. Good morning. Welcome back.
Yeah, thank you very much.
I hope you
Cool.
had a good week off and ready with some energy to start again.
Yeah, I'm knackered. It's been a busy week. Kids have run me ragged.
I'm here. We had those a whole weekend of commemorative parties for the Queen's Jubilee. I've been running around with dishes, food, drinks, tables, parasols. I'm knackered.
Yeah, we had that yesterday. I got back Saturday afternoon, and then Sunday we all had a street party here. Literally every house was out, so we were setting that up from the early morning. But apart from a bit of rain, good fun had by all, and I hope all of our UK watchers had a good long weekend. Shame they didn't extend it to Monday because I could have done with today off, but such is life. Such is life. Right, well, let's get stuck in. First of all, thank you very much to K-Man for holding the fort and doing a sterling job last week. I'm sure he kept you all well entertained and up to speed on all the news. So thank you very much, Kay, for that. I may need a bit of help from you this morning because I am playing a bit of catch up, as tends to happen when I take some time off. I like to switch off as completely as possible. So I only looked at my charts now and again during the week. Otherwise, it doesn't feel like a holiday if you go on holiday and spend your time plugged into the charts and the apps and everything. So I am playing a bit of catch up. Not much really to report in news wise, mainly from Asia, that sort of thing. What I have noted is that Friday's data was pretty good from the US. Non-farm payrolls holding up, wages down a little bit, unemployment rate there or thereabouts, a little tick up in the participation rate. So no real fears coming from there. The ISMs were fairly decent if you compare them to some of the European ones. So just generally looks like the US is still holding up its end data wise and keeping the Fed on its path. K-Man remarked to me that there's some potential indications that some in the market are looking for the Fed to pause around September time. It all depends on where they get their rates to ahead of that. But otherwise, things ticking along pretty well. We had Kuroda, Bank of Japan's Kuroda, coming out overnight, being very, very adamant in his comments about monetary policy. They're sticking to their path. They're going to continue easing. They don't see inflation getting to where they want it to be sustainably. One of the key remarks he mentioned was that they need to see inflation and wages becoming more sustainable. So reaffirming what they are looking for in terms of getting that sustainable inflation before they even start to look at changing policy. So before I went away, we did get a little bit more on what it would take for them to start changing policy and when they would start to talk about it. But then he's gone firmly with the comments that they need to see the sustainable inflation before they even think about it. And until then, they're staying the path. As you probably know, and I'm sure K-Man has mentioned last week, the jump in yields has been pretty much the story, putting a bit of a tailwind to the dollar, or at least mainly the yen pairs. So we've seen those high, but we'll cross those when we look at the prices. Pretty much the big news this morning was in the UK with Boris Johnson finally, will it, won't it, no confidence vote, and that's happening today. It's been confirmed by the 1922 committee. They've exceeded the 54 letters needed to force a no confidence vote. Now that was a key comment, that they've exceeded it rather than reached, because reached suggests they just got to the number. Exceeded means they've gone over the 54 letters needed to force this no confidence vote. Now that's going to happen anytime around 1800 UK time BST, so it's about 1700 GMT. For a couple of hours that could take, and the effect on the pound isn't necessarily going to be huge. So just to make it clear for those who are not from these shores or who don't know the process, this is just a leadership contest or a leadership vote. So it's not a change of government. It won't lead to a general election, change of government, anything like that, which is more of a market risk, if you like, a bigger amount of uncertainty. This is just a leadership challenge. So whether Boris wins, whether Boris loses, what happens after that, whether we get a new Conservative leader, the government is in place until the next general election, barring any other unforeseen circumstances. So nothing really changes. What the market will be looking at is how much uncertainty a leadership change brings and who potentially is the person that's going to come in and replace Johnson. Are they market friendly? Are they business friendly? So it's really going to be what investors view the leadership contest to be and who's going to come in. Now, really, if we do see any market risk for the pound, it's going to be on the margin that Boris gets in this vote. He is expected to win. It's just by how much he wins. So if there's a really small margin, then that suggests that he's really unlikely to make the next general election or even the next 12 months. If he does win the vote, the rules currently stand that no one can make another no confidence challenge for at least 12 months. But there is a procedure, or there is a way for Conservative MPs to vote to change the rules so that they can do another no confidence vote. That's politics for you. If you don't like the rules, you change them. But otherwise, he'll be left alone for 12 months. Personally, I don't think he'll last. He'll make the next election, which is 2024, purely because it seems that sentiment in the UK is really against him now. I didn't think he would last the Sue Gravy poll before I went away. He's managed to get through that, but the public mood has really shifted against him, and Conservative MPs will be worried that mood is strong enough that they will fail at the next general election. So they will be looking to replace him before then. But for now, he is expected to win the vote. That may be a little bit pound positive if that happens, because markets and investors want certainty. They don't want uncertainty. The bigger risk is if he gets a small margin, which would suggest more uncertainty to come, and possibly a bigger price risk is if he actually loses. But in the grand scheme of things, I'm not expecting any huge moves. Famous last words, of course, because as I say, this is just a leadership challenge, not a government change. So as long as there's no big waves from whoever takes over, then things should carry on, and policies should largely follow what they've been doing already. Now in the ForexAnalytix room, and I'll pop that up quickly if I can find it. Where's it gone? There we go. I did put up some of the odds from the betting markets, who's likely to be taking over. So let's pop that up for you there quickly. There. So these is the odds via the bookmakers. So where the betting money going, which is a big influence in how the market views the leadership contest. These odds are 2-1. So that top one, Jeremy Hunt, is 4-1. Liz Truss is 6-1, and so on. The odds grow as they drop down. So that's who the market, as far as the money goes, thinks is going to be favourite to take over in the leadership contest. Rishi Sunak was well up in the leadership, but he's dropped back a little bit. But you don't take these as a definitive guide. This is just because we love a bet here in the UK. It's often looked at to see where the money's going, where the big money might be going. If we take a look here, we can see the most popular bets that have been coming in. So Rishi Sunak has been taking a decent amount of money, even though he's not favourite. That's where a lot of the bets are being placed, and it's pretty split between all the rest of them, and a big chunk going in others. So again, it's not a definitive guide of who will be favourite, but if we look at the betting odds, that's can be a good indication there. So that's it from the UK side. I say no real big risk, unless all this creates some huge uncertainty, but we still might see some algo moves. around the vote time, depending on the margin that Boris Johnson gets. So we'll look at pricing in a moment and some of the charts in a moment. Just to run over the rest of the week, it's a bit of a quiet week on the data front. We've got the RBA tomorrow and the ECB on Thursday, but as can happen after NFP week, which can be a huge amount of data. We had the ISMs, the jobs numbers, so on and so forth. This week can be fairly quiet on the data, so it's really the central banks that we're going to be looking at. The RBA tonight or tomorrow, and the ECB on Thursday. We do get some construction PMIs out as well this week. More minor numbers, but something we'll keep an eye on. It feeds into the general fundamental overview. Quick look at today's option expiries. You can see there.
Ryan, if I may.
Yeah, go on, mate.
There's one big data day this week, but we will have to wait for Friday, in my opinion, on the data side, which is the US CPI and the Canadian labor report. And the Canadian labor report, coming on the back of a hawkish Bank of Canada, could move markets a little bit.
Yeah, cool. Thanks, mate. Yeah, so just looking at the expiries again quickly for today. Not too much out. We do have some bit of size between 107, 108 in euro dollar, a little bit just below. Dollar yen, not a lot. What else we got going on there? Dollar CAD's got a fairly decent one, 2 billion, but a bit high up. Not too much down around the current prices there. Dollar MEX has a few lumps going off up and down the ladder there, so one to keep an eye on there. So apart from that, pretty quiet. So we'll jump into the pricing, and I'll probably take a bit of help from K-Man here, because as I say, I've been away for a week, so I've not really been following the moves. Dollar yen, we've gone obviously from one end of the range to the other. Bit of a confirmation just under the 127 area that we were looking at previously. We had those that break there down towards the low 126s. So we may look to set a lower end of the range down toward that sort of area, but we're back above 127 at the moment and holding pretty steady, as you can tell. We've had that big push up towards the top, an area that I'm going to be looking at, and I was short 127.40 before I went away, and I've added to that position pretty much all the way up to 130.87. Not a huge position, but I want to try and play the range, and I've also got one eye on the potential change from the Bank of Japan. Obviously, we've got their meeting later on this month as well. So the top side of the range coming in at 131.25-30 area is where I'm going to be keeping an eye on. If we break that, I'm going to make a decision on whether to keep these shorts or fold them in. I've currently got stop loss in, more of a disaster stop, 132.50. But I want to see how this range progresses. 131 has been the top for now. So as long as that holds, I'll remain confident in the position and see where we go from there. But it's been pretty much a yield story from what I can make out and what the K-Man's told me. I don't know if you've got anything to add to that, K, that I'm missing out on there.
Really, it's where there was some light expectations that Bank of Japan may start to discuss changes in the monetary policy. The latest commentators, Kuroda included, seem to all kill this idea right here and now. But okay, we never know what's going to happen. Bank of Japan on the 17th. But until then, they are squashing expectations for a quick change anyway. So yes, it's a yield story, and also Japan yields versus the rest of the world yields, as we were already mentioning. The rest of the world ex-Japan yields are on the up. So Japan being the only one with a firm yield curve control, that's probably all weighing on the yen right now.
Yeah, and I'm going to be keeping, just looking at yields and the US 10s, I'm going to be keeping on the 3% mark. It's a bit of a psychological number, as well as potentially technical. It's a level I would have expected yields to be above, with the Fed tightening so let's call it aggressively or solidly. So I'm going to be watching a move up there with regards to my dollar yen position, because if we do get back above the 3% mark, and we push on higher, that has the potential to drag dollar yen and the rest of the yen pairs up higher generally, in as well as the wider yield space. But that's going to be a similar marker to the highs in dollar yen, around about that 3% mark. So one that I'm going to be keeping a close eye on there. Interesting to note that the shorter terms have moved up as well. We're still thinking of the neutral rate for the Fed to be around maybe 2.25, 2.5%, which is where you'd expect to see the shorter end of the market, the bond market, settling around that mark, and we were around that 2.5% mark, but we have pushed on higher again. But we're not looking close to coming to those former highs around about the 2.8%. So the market is gyrating around what's going on with the data, both sides of the pond, whether it's in Europe, Japan, wherever it is. And so these moves, not huge, although, obviously dollar yen's a fairly significant move, 300 odd pips. But in the grand scheme of things, these are just the gyrations around what the market is minutely pricing for the Fed. Are they going to keep hiking? Are they going to pause? Will they lower hikes to 25 pips thereafter? So these small, expectation changes in the market is what's given us this current volatility and these current price moves. So unless we break some new ground in things like yields, in things like dollar yen, or the expectations change wildly, then I'm potentially, as I say, looking for these ranges to hold. Maybe we get the test of the highs in something like the 2 years here up towards that 2.8 to 2.85% mark. But if we don't break those highs, then we're potentially going to stay in the ranges, and that's going to reflect into FX as well. We'll take a look at Aussie dollar with the RBA, because another interesting situation going on here, with the market not quite sure what the RBA are going to do. Are they going to hike 25 basis points, or are they perhaps going to hike 50 basis points? A bit of indecision going on there, really. But again, we've had this big move down from the 75s, 76s, and that was when we first just got inclinations of the RBA changing their tone. They were banging on about not hiking until 2024, and that was a load of rubbish. But now with the market, suddenly swinging around to maybe 50 pip hikes, it's putting a little bit more bearishness in the Aussie dollar. Obviously, China is a big feed through as well, and opening up in various cities. Shanghai, I saw a headline that they're going to resume flights now, domestic flights to the rest of the country. So slowly the big areas are opening up, which is going to be obviously a boon in the correlation with the Aussie dollar. Got some technical levels here, fairly solid levels, up towards the 73s, which I had marked previously. We're making these steps up, and as long as these steps hold, technically it gives you your patterns, whether it's bullish or bearish, just to see where the levels are holding. Conversely, you've got your looking at Aussie dollar, you've got your resistance levels. We had this trend line coming in, long-term trend line, had a little poke above, now it's holding again. Had a bit of resistance up towards this 72, 70, 80 area, before we get into that bigger band up in the 73s. Some of these are all old, tried and tested levels. So while we get a period back in March where it's up and down, and it's not working, what I look for is, if we've been away from the price and we come back to it, is it going to have a say in the price again? And if it does, then use it to lean on. But at the moment, I don't know if you've got anything to add on the Aussie dollar. It looks fairly buoyant, more a dip buy than a rally sell for the moment, and then we'll see what the RBA do and their message. If they're super hawkish, then we could get a break up above that 73 level. But we could also get buy the rumor, sell the fact, if they only hike 25 pips overnight. What do you reckon, Kay?
Yeah. We also, it's completely that, what what they will decide is probably going to determine the next 100 pips up or down, or more. And we've seen it in things like Aussie Kiwi that has been catching up since the RBNZ, and we now are going into the RBA. So that thing has been stabilizing as well from lower levels back up to the 110s where we were prior to the last RBNZ. So yeah, I think it's all about expectations, and then see what happens depending on the RBA and how the reopenings in China go, really.
Yeah. Right, so we'll have a quick look at euro dollar as well. You know, we've got the ECB coming up Thursday. It's going to could be a fairly big day for the ECB. You know, we've had all the noise from the ECB members, ending QE, beginning of July, hike possibly at the end of July, or looking like a hike at their meeting, I believe is the 21st of July. What we're going to be looking for is how hawkish or dovish or non-hawkish the message might be on Thursday, particularly from Lagarde. Is she going to signal a strong hike path, or is this going to be a hike now and sit on their hands for a while? The market's pretty much expecting 2 hikes, July and September, and then perhaps the pause button to be hit. So really, we're going to be looking at whether we're going to get a hawkish hike or a less hawkish hike announcement for July. Not expecting anything at this meeting. This meeting is really going to be setting up July. I don't think there's much expectation for a hike to come at this meeting, although you never rule out the impossible, as we say in trading. So we always be a little bit prepared for it. That will obviously be a big shock if they do hike at this meeting, but that's a very slim chance. But it's more than none, so something to just be aware of. Price wise, still holding up. I'm still holding a small long that I took down in the 104s. And here we are again, you know, banging ahead on the resistance area that we were looking at, this 38.2 fib. From there into the 108 area, we've been up, we've had a look, we've had a pullback. Technically, it's played very nicely. It's pulled back to this break area that we had here, 106.30s, bounce from there. So we've got a bit of a range at the moment, ping-ponging between the 2 levels there, the 106.30s and you know, these high 107s. I'm going to be thinking potentially about a break trade long in this one. I'm not sure I want to do it before or even over the ECB, so it might be one that if we do get a strong signal from the ECB and the euro pushes up, it might be a trade I'll look to take during the meeting and the press conference, just to potentially ride the wave if the news is hawkish. The good thing about ECB press conferences for trading is that if we do get an immediate headline, you know, in the notes that accompany the statement that accompanies it, the market can jump, but then what it does is it tends to ease off, perhaps depending on what Lagarde says, because it wants to get the risk of the press conference out of the way. And sometimes you can see the price reverse what it's done if no further comments come to whatever came in the original statement. So that can sometimes give you a little bit of a chance to get in on a trade, because what can often happen is once the press conference is done, the market then says, right, we know what the ECB are doing. There has been a change, or there hasn't been a change, and it has a second wind and it pushes on after. So if we do get some hawkish news from the ECB, we'll probably get a decent pop in the euro. But if you get any small reversal, any pullback, decent pullback in that as the press conference goes on, it might be an opportunity to look at jumping on a dip back, as I say, because once the press conference finishes and there's no risk to come from Lagarde, then you can potentially see a secondary move. So that's maybe the way I'll look to play it. Even if the news isn't that hawkish, I may still look at a dip buy if we get a decent one, because the ECB are going to be moving to a hike path. They can't ignore it. So to sit on a trade for the foreseeable future for over the next few months may be something I'll look to do and build a bit of a bigger position in that one. You got anything on the ECB you want to add to that, Kay?
Yeah, just while you were off, Holtzman and Kazakhs were out. They're probably the two biggest talks right now, that they would support a 50 BP raise at some of the meetings. But we must say that overall, most of the members are not talking about this meeting for a lift-off, but they all talk about July. So what the market has been doing is trying to price in an even 50 BP hike into December, well, timeline-wise, because the hawks seem to come out more and more vocally. And Lagarde hasn't really been pushing back against it, but knowing her, right, 50 BPs is a high hurdle for them. So I think that that's going to be something that the market is going to pay very close attention to it, whether she closes or leaves the door open. And that might be during the Q&A. If she leaves the door open for a 50 BP hike at some stage later this year, then I think Eurodollar can really break that 108 and have a lift up to 110.
Yeah, and I think, you know, we should also look at what could happen on the other side. You know, as much as this June meeting is for setting up what happens in July, her aim and ECB aim will be to take out the volatility for the July meeting now. But she still may leave, like you say, the door open to say that we haven't decided fully on hikes, you know, say something like that. We haven't decided if it's 100% we're going to hike in July. And if we get something like that, the market's going to go, oh, hang on a minute, that doesn't sound good. And then, you know, we could have a risk of euro dollar dumping off a bit. So really, it's all, as I say, for setting up for July, not for what's going to happen, any action now. And as traders, we need to look at the risk both sides. You know, I'm expecting it to be fairly bullish. I expect the chances of the euro going higher is greater than it going down, but there's obviously still a risk that some comments from Lagarde at this June meeting keeps the market from running too far ahead of itself, just keeps it in check a bit, which then creates a bit of disappointment, and when we could see the euro dollar fall on that sort of outcome. So, you know, there is two-way risk at all these events, and we just try and balance out where we see the likelihood is, and also how we react to the pricing if it does do that. So as I say, if we do get a less than hawkish message at this meeting, I may look at that dip to jump on. Quick look at euro sterling. Again, this is one that I've been banging on about, this fib level and the resistance up in the 86 area. Had another test overnight yesterday, and you know, it's coming up short once again. I'm getting the feeling of the too many knocks at the door for this one, so I think I'm going to drop in a couple of buy stops just above 86, maybe 86.20. But again, I'm going to be thinking about the ECB on Thursday. I don't want to get, you know, into a trade that's just whipsawed on some headlines or the press conference. But I'm more confident in a break trade on this one than I would be potentially in euro dollar at that fib as well, in that 108 handle. So I may decide to drop a little buy stop in here. I'm still long from the 83s and 83, 83.50 and 84. So happy to hold in onto that. Got a bit of margin there. And with the UK political news, you know, that may keep the pound on the back foot for a bit and give this a bit of room to roam. But yeah, I'm more looking. I've got bigger conviction for trying to break trade of this 86 handle in this one than I have on euro dollar. Right, let's have a quick look. Cable seems to be getting a decent bit of support, you know, just under this 125 handle. Let's take it in a bit of a shorter term one. Let's have a look at the hourly.
Yeah, before
yeah, go on, mate.
Yeah, before you move on, we need to note about the yields once more. It seems the market is more trading what a possibility for the BOE might be, because we saw the sterling yields climb higher again from right from the open this morning, and that causes that how shall I say, elasticity and resilience in the sterling, putting yield moves still ahead of politics. And I think until if or when something happens with politics, but it causes those jumps in sterling, and as you say, capping important level in the euro sterling, and seeing those bounces in cable. It seems to have to do with yields again, because the sterling yields were ticking up again this morning.
Yeah, and that makes a good point, that you can tell what the market is trading or how strongly it's viewing any particular event, like the Boris Johnson thing, depending on how the market's moving. Now, yields are up in the UK with the rest of the yield space, bar a couple, Italy, Spain. So you can't say that yields are up, particularly on the Boris thing, when it's just a general yield story all round. So it tends to say that the market isn't really worried about the Boris thing. In this case, it's just about finding those little clues to know which way the wind is blowing in any particular pair or currency. So is something like the Boris Johnson thing affecting the pound, or is it not? And just knowing those little differences and those little clues just gives you an idea. Because if you're getting bearish on the pound over Boris Johnson, and the market's saying, actually, we don't give a monkeys about it, you're potentially wrong and the market's potentially right. So it's one of those things where the I think is not going to work because the market's telling you otherwise. But that can change, as we know, with the headline. So just try to know which way the wind's blowing at any particular time. Gives you a little bit of a bias for your trading, whether it's short term, intraday, or longer term. You got anything else you want to look at quickly, Kay?
Currencies.
Look at. We're looking at the cable, weren't we?
You want me to take the screen?
Yeah, go ahead, mate. Let me end.
Right, let me prepare this. Let me share my screen for a minute. I'll talk about some other currencies and maybe gold and silver quickly. So go ahead, mate. We can have a view on those ones. Where is my screen? There we are. All right, you can see it. Can you see my screen? Yes, mate. Okay, so yeah, that's what I was showing on the yields before. But let's quickly look at a couple of currencies. And as I was speaking about those emerging market currencies last week as well, keeping bid despite of the rest of the yields also catching up with those. But we have to know that as well, Banxico raised rates again 50 pp's. There are talks in the market that they might do even a 75 coming up over one of the next meetings. And then the rand as well is behaving very strongly. I think there's a lot of carry going on, which is also weighing in turn on the yen, as I showed last week. But we have to pay attention, because we are slowly coming back to the zone. So we had this 70-75 resistance on the dollar mix that I was talking about last week, which capped. And now we are starting to look at this other side again. This is a 2017 trend line coming in, and we are slowly getting back into there. Every time dollar max tries to rally, it gets smacked down, and I think it has to do with some carry against the ultra low yielders. We have to pay attention to this 1945-42 area. If this goes, we can be looking really at another move, perhaps ultimately down to the 18.5. That's one to really keep a close eye on when we are trading crosses and emerging markets and carry. And the other one is the rand, which I also showed again. This is our third attempt here. This trend line is around 1539.40. We are below it right now. There's this fib retracement zones in the 1540s. We are below it right now. Then we are in this congestion zone. As I was saying, I'm not a big fan of MAs, but MAs, sorry, moving averages. But when they all come together between the 55 and the 200, it's important. And I think this 25-32 zone, which we are now starting to have a close look at, are going to be important. If it breaks, this could ultimately get back to the underside here of this triangle, which is below 15. So watch out for those moves. If we get a close back above, I'd say 43, 48, we're back into neutral territory here. That's what I wanted to show quickly on the emerging markets, and then have a quick look at the metals. Gold, we had this zone last week. It held the last support very well. Then we saw a bounce, came into the resistance, the first resistance zone, quiet down again on average data, a bit of uncertainty, and we're back on this trend line right now. So in the high 1840s, I think it's still this big support zone now. It's getting bigger, the support zone, even if we get back below the trend line. But if we hold the trend line, then we can have a serious test, in my opinion, to the at the 1875, 1880 zone before we can talk about the 1900. So, but for the time being, it stays pretty much supported. Quick look at silver. It's a tiring story. Each time we try to break above the 22 figure 15, 1, 2, 3 attempts over the past week, and then we tend to come back in. We can eventually draw a quick support line here, which now also will come in close to 22. So it's 22 is a little bit of a pivot zone. If we start to hold, we can get back to 22 3/4 and perhaps 23. If we fail, it's back down to 21.40 and perhaps 21 the figure on silver. That is what I wanted to show. Ryan?
Yeah. Yeah. Well, we got a question from Nick. Is currently confused as to the strength in the CAD versus USD with the 10-year yields, marginal difference between them. If you want to look at that dollar CAD, just from what I can see, we've obviously got the BOC sounding fairly hawkish, with that 50 pip hike. Also, we got oil sitting on the highs up near the 120s. So there's a couple of factors that I would pick out as to why CAD is strong over the dollar, particularly against, where we're seeing some other pairs looking a bit weaker, dollar pairs looking a bit weaker. You got anything else on that?
No, I think it's absolutely that. I think we've gone, if you look at it from a technical aspect, we have gone into this 130.31 resistance zone, failed it, broke back through the supports, and now we are like coming very close to a support line here, coming in from 2021. I think around 125.20. Call it with a bit of certainty, the thickness of the line, call it 125, figure 20, already here, right where we are, where we were, which held on Friday in the 40s. Call this whole 2040 zone a pretty important support, but it's all about expectations, very high energy prices, which Canada is also benefiting from. And I think there's a big test for the Canada coming up on Friday on the labor reports. If they can print out another decent one, Canada is for sure going to be supported again. I do prefer to express it via Canada yen right now, as people will know, and as people are in the room know, I bought Canada yen again around 102.5. I've even added a little bit today after Kuroda. I think on the Canada yen, it might be on its way to pretty high levels. The fact that we are above this 102.95 again, the prior high, and then this looks like a really strong bull flag. So I'm going to start by monitoring 103 for supports, even 103.70 on the really short term. But I think well, that's what I'm trading anyway. I'm expecting sooner or later to go for a test of the 105, perhaps 106 in the Canada yen. But again, big test coming up on Friday, and then the week after on the Bank of Japan.
Yeah, good stuff, mate. Good stuff.
Okay.
I mean, from my perspective, yeah, can do. Yeah.
Okay.
It's gone. I'll log mine up. Yeah, so from my point of view, looking at dollar CAD, it's a question of trading the ranges again. I made a complete mess of shorting up in this area up here, which would have been nice to sit on, obviously. So the question is, what happens down here? You know, the thing we've got with the Bank of Canada is, you know, I wouldn't expect to move down to 120 unless we saw, you know, oil shooting to 140, 150, or, you know, the Bank of Canada going for 50 pip hikes for the next 5 meetings, and the Fed stop hiking, something, you know, something crazy like that. So really the test down here, 125, and I've got my trend line coming in at around about 124.80s. You know, we can probably draw a bit of a line in the sand around about the 124.50-60s here against these prior support points. So, you know, a test down here may be worth looking at for longs. I'll have a look at that, see what the news is coming out like. You know, you don't need to, I won't need to you know, risk a great deal on it. You know, maybe buy into 125, a stop somewhere under 124.60 if I'm wrong, and just see if we hold that range if we play the game. But yeah, keep an eye on oil, as you say, the Bank of Canada data that comes out. I think the retail sales is fairly current because some of their data can be pretty far behind, you know, a month behind everyone else's. Let me have a quick flick and we'll have a look if I can find it in time. Where are we going? Unemployment, yeah, that's May data. Yeah, so it is pretty current. I think it's their retail sales that is a month behind everything else.
Yeah, I think those unemployment data in Canada are the only one that we get in the right month. All the rest are pretty dated when they come out, right?
Yeah. Did we get the ADP from Canada at all? Do you know?
No, it's banked for 2024. They're trying to gather the data. Yeah.
The ADP, the ADP Canada employment, one of the best data points out there for being complete rubbish.
Yeah, the ADP. Yeah. Hey Ryan, I just forgot to show one thing, and I also forgot to show it on Friday. Can I grab the screen just for 1 second to show the S&P?
Yeah, sure, mate. I'm going to have to start charging you rent for screen sharing.
Yeah, don't worry, mate. You can charge me whatever you like.
Yeah, go ahead, mate.
All right, here. This S&P 500. It's in the short term, we've started to form like an interesting triangle, in my opinion, and we've been respecting it over the past couple of sessions. Quick look above, very quick look below, but we're holding those levels. So I would say to start the week, 41.80 and 41.20. We've got a 60 pip window. The triangle is slowly closing, of course, because it's a short-term one. But I think that might be your first little range to look at to start the week. Obviously, then above there, we've got 42 and a quarter, and then the big one will probably be around 43, but we will have to see how the week develops. The underside, if we get back below 41.20, call it 15.20, then we'll have a bit of stuff going on around 41, where the prior low held, and if that's not enough, 40 3/4. So I think to start the week, and since we only also have like few data today to start with, you might be looking at a relatively small window in the S&P. And that's really what the last thing I wanted to share.
Yeah, cool, mate. Well, I've got nothing much more to add to that. I just say I'm going to be playing a little bit of catch up today, get back in the swing of things. Sometimes it can take me a couple of days to find the mojo, get myself back in the rut. So we'll call that a day there. Just quickly, if you do want to come and join us on the Forex Flow ForexAnalytix chat room and platform, please feel free. I'll pop up a link quickly there in the chat. Take advantage of a Forex Flow special discount there, 20% off for as long as you subscribe. That discount's not available anywhere else. Do come along, have a look. This is what we talk about all day, every day, as we do here in the show. And thank you very much for coming, boys and girls. And we shall see you tomorrow.
Thanks, Ryan. Welcome back.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.